Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 4th, 2026, and we're diving into Latham Group's latest earnings report for the fourth quarter and full year of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Latham Group, a leader in the in-ground residential swimming pool market, has just released their financial results, and there's a lot to unpack, especially with their strong performance and strategic acquisitions.
Revenue and profitability overview. Let's start with the top line. Latham Group reported net sales of $100 million for the fourth quarter, a 14.5% increase from the previous year. Despite this growth, they posted a net loss of $7 million. John, can you explain this dynamic?
Absolutely. The increase in net sales was primarily driven by a strong pickup in fiberglass pool sales and increased demand for auto covers. However, the net loss, although significantly reduced from the previous year, reflects ongoing investments in sales and marketing to boost product adoption. The good news is that their adjusted EBITDA saw a remarkable increase of 189.6% to $10.5 million, indicating improved operational efficiencies.
And how did they perform over the full year?
For the full year 2025, Latham's net sales reached $545.9 million, up 7.4%. This growth was supported by both organic and acquisition-related factors, despite a challenging market environment. Their adjusted EBITDA for the year was $99.8 million, up 24.4%, showcasing their ability to leverage scale and improve margins.
Strategic initiatives and market expansion. John, Latham Group has been quite active in expanding its market presence. Can you tell us more about their recent strategic initiatives?
Certainly. In February 2026, Latham acquired Freedom Pools, significantly expanding their footprint in the Australia and New Zealand markets. This acquisition is expected to be immediately accretive to earnings, adding approximately $20 million in net sales annually. Additionally, Latham's focus on the Sand States, particularly Florida, has paid off with double-digit growth in fiberglass pool sales, which now account for 76.5% of their total in-ground pool sales.
It sounds like their strategic focus is yielding results. How does this position them for future growth?
These initiatives position Latham well for future growth. Their strong market position in key regions and product categories, combined with strategic acquisitions, provide a solid foundation for continued expansion and profitability.
Financial guidance and future outlook. Looking ahead, what guidance has Latham provided for 2026, and what are their key focus areas?
Latham has provided a positive outlook for 2026, with guidance for net sales growth of 9.0% and adjusted EBITDA growth of 12.7% at the midpoints. They plan to invest significantly in branding and marketing, particularly in the Sand States, to enhance dealer conversion and expand their market presence. Capital expenditures are expected to be between $42 million and $48 million, reflecting their commitment to growth initiatives.
It seems like Latham is well positioned for the coming year. What are the potential risks they might face?
While Latham is on a strong growth trajectory, they must navigate potential risks such as market volatility, competitive pressures, and the need to effectively integrate acquisitions. However, their strategic focus and operational efficiencies should help mitigate these challenges.
EPS forecast and analyst expectations. John, let's discuss the earnings per share. Analysts had forecasted an EPS of minus 10 cents, but Latham reported an actual EPS of minus 6 cents. What does this tell us?
This is a positive surprise. The actual EPS of minus 6 cents is significantly better than the forecasted minus 0.10 cents, indicating that Latham's cost management and operational improvements are yielding results. This improvement in EPS, along with the strong adjusted EBITDA growth, reflects the company's effective execution of its strategic initiatives.
How are analysts reacting to these results?
The sentiment among analysts is generally positive. The better-than-expected EPS and strong financial performance suggest that Latham is on the right track, and this could lead to upward revisions in future earnings estimates.
Key takeaways. As we wrap up, John, can you summarize Latham Group's performance and their investment prospects?
Certainly. Latham Group has demonstrated strong financial performance with significant growth in net sales and adjusted EBITDA. Their strategic acquisitions and market expansion efforts are positioning them well for future growth. The better-than-expected EPS and positive guidance for 2026 further enhance their investment appeal.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Latham Group's performance in the comments below.